Now, let's start in Africa's biggest economy. The gold strike in South Africa has left a paltry 6 out of 23 mines operational. But it looks that the strike, which started last night, could potentially end soon. The National Union of Mine Workers has accepted an 8% wage hike from junior miners Village Main Reef and Evander. Now, NUM says it's waiting for a revised offer from the bigger gold mines. The union was demanding a 60% pay hike in wages for entry-level workers and a 15% rise for all other workers.
Should they come up with something which we can put back to our members and our members accept it, it can be a quick settlement. There are other small players on the sideways outside the big boys who have indicated their positiveness to an extent that they've been excluded in the strike on the basis of what they've offered. So we're quite positive that we should be able to find one another very soon.
There are two things that we're waiting for before we can make a final decision. In the first instance, the offer that was made to the skilled workers was 6% plus an additional 1% linked to a gain share scheme. The gain share scheme hasn't been clarified or explained to us, so we're waiting for more information on that. Secondly, we're waiting for the revised offer. As soon as we get the revised offer, we can go back to them, our members, and explain to them everything, including what the gain share scheme entails. And then we will make a final decision if we will join the strike or if we will settle.
Away from the negotiations, some 80,000 miners stayed out of work, bringing the sector quite literally to a virtual standstill earlier today. As CCTV's Guy Henderson reports from just outside Johannesburg, this strike is one that, if protracted, could seriously damage South Africa's economy.
The shafts lie still, but few mass gatherings. An almost silent protest as union leaders tread carefully.
In most cases, our members are not actually freely to express themselves wherever they are. It's a situation that is a totally changed environment where they are not even, some are not even free to go around in most of the hostels with an NUM regalia.
It couldn't be more different from the scenes seen here last year. Thousands of miners fed up with the NUM, refusing to work. This time action is legal and controlled, but avoiding confrontation in this polarised sector remains a tightrope to walk. Mining bosses are still in discussion about implementing what they're calling a last resort, and that would be literally to lock the gates of every single mine and bar workers from entering, whether they're members of striking unions or not. But with one particular in mind, after sweeping through the platinum sector, the NUM's rival, the Association of Mine Workers and Construction Union, seeks further inroads here. Some gold bosses fear their tactic may be to wait until mines are weakened by this strike and only then jump in with their own. It's hoped that by forcing confrontation now, that might be avoided, but it's risky.
If a strike action lasts for more than 3 days to more than 5 days, it becomes counterproductive. It doesn't benefit anybody. It doesn't benefit the union itself. It does not benefit the employee. It doesn't benefit. It wouldn't benefit society, and so it goes, and it becomes costly.
A sector in decline, but still at the heart of the economy. The complex web of conflict that persists here could do yet more lasting damage. Guy Henderson, CCTV, Carltonville, South Africa.
Now, Sumitra Naidoo has been keeping a close eye on the labour strife in Africa's biggest economy of the year. She joins us now live from Johannesburg, South Africa. Obviously, Sumitra, this is a fast-moving set of events in South Africa. Give us the latest summary of developments down there.
Well, Rama, the wave of strike action is continuing in the automotive, construction and gold mining sectors. The motor industry presented a 10% multi-year wage deal at the weekend. The union is still deciding on whether to accept it. The strike is now in its third week, and manufacturers, particularly BMW and Ford, say they've been severely affected. The strike at SAA also continued today. Workers protested at the OR Tambo International Airport today. They've rejected the 6.5% offer by SAA. There's still no news regarding petrol attendants and dealership workers. That strike was halted earlier this week. Negotiations are continuing there.
Indeed, Village Main Reef and Pan-African Resources, however, managed to agree to an 8% wage hike deal with NUM members who do work for them. How was this deal arrived at?
Well, we heard last week that some mining houses decided to break away from the collective bargaining process at the Chamber of Mines and went into their own private negotiations with the unions. The National Union of Mine Workers said it was open to such discussions, and I got the sense from the union today that those sideline negotiations were actually working better than at the Chamber. It did come as a bit of a surprise, though, that NUM accepted 8% as it was insisting on double-digit increases.
Indeed, we'll have to leave it there, unfortunately, though. Thank you very much for that update. That's CCTV's Sumit Naidu live in Johannesburg, South Africa, with the latest developments, of course, from the labour strife in Africa's biggest economy. Let's shift gears now to the global stage. World leaders have started to arrive in St. Petersburg in Russia for the G20 summit, which is set to start on Thursday, well, at least the leaders part of it will. Leaders attending that summit will evaluate global economic growth and discuss ways to promote job creation and open trade. Now, in July, the International Monetary Fund cut its global economic growth expectation for this year to 3.1%, down from a previous estimate of 3.3%. And though experts have warned that it is unrealistic to expect to resolve all global trade and economic matters in just 2 days, many countries will be pushing for structural and very difficult changes. Here's CCTV's Guan Chin with more from Russia.
The financial crisis that triggered the creation of the G20 lingers on. When leaders meet in Russia's second largest city of St. Petersburg, they will face pressing challenges. The U.S. economy is picking up, but growth remains weak. The European Union is still fighting a debt crisis. Chinese exports and economic growth have dipped, and emerging economies such as India and South Africa are facing capital outflows and currency depreciation.
Global economic conditions remain challenging. Growth is too weak, employment is too high, and recovery is too fragile. More work is needed to improve the situation. There is a need for structural reforms across all major economies.
In July, the IMF cut its global economic growth expectation for this year to 3.1%, down from previous estimate of 3.3%. Job creation is a key item on the growth agenda, from high of 25% in Spain and South Africa to a low of 3% in South Korea. Unemployment rate across G20 countries averages 9%. The growth versus austerity debate has shifted. But there are some encouraging signs, with economies actively pushing for structural and often difficult changes.
You can see, if you look at the rates for sovereign debts, they are stable. Markets have confidence in the euros, in the stability of the eurozone as a whole, and economy is recovering in the whole eurozone, and the average deficit has been halved in all member states of the eurozone in the last 3 years.
The global economic challenges that need to be addressed will test the determination and unity of G20 members. Analysts say it's not realistic to expect the summit to solve everything in just 2 days. However, continued coordination of national macroeconomic policies is crucial to build confidence. Leaders will have the opportunity to join forces and hammer out a global response to the most pressing issues. Guan Xin, CCTV, St. Petersburg.
Now, the South African head of state, Jacob Zuma, is in Russia for the 8th G20 Leaders Summit. A spokesperson for the South African presidency said that that country hopes to use its participation in the meeting to promote and strengthen the interests of Africa and the Southern Hemisphere at large. Now, South Africa also hopes that the G20 members will take collective action to stabilize the volatility of emerging market currencies and not focus solely on their own national interests. The 2013 G20 summit is set to focus on measures to boost sustainable, inclusive and balanced growth right across the world. President Zuma is also expected to attend a BRICS leaders meeting to reflect on the progress that has been made since the summit in Durban that was held in March earlier this year. Now, still on matters, G20 leaders present for that meeting will certainly be focusing a lot of their attention on Syria. So far, advanced and emerging economies are somewhat divided about the West launching airstrikes on that country. Analysts, however, are noting that developmental issues should also take centre stage. CCTV's Sumitra Naidu has this perspective from South Africa.
G20 leaders will gather in Russia this week, but the meeting is likely to be overshadowed by concerns over a possible US-led attack on Syria. Analysts say it's unfortunate as leaders seem to be making progress on furthering the developmental agenda, especially in Africa.
What the G20 will discuss is the so-called development agenda, which is fairly wide, but things like infrastructure, for instance, will be under discussion, how to raise more finance, innovative financing, issues like financial inclusion.
Most African countries are growing at a rate of over 5%, but social and economic inequalities still plague the continent.
Looking at economic growth, for it to be more sustainable and more inclusive, it has to look at policies to address inequality in order to, overcome some of the slow growth issues and dealing with issues of poverty.
Tensions over Syria are already being felt on world markets. Emerging markets are also taking strain on concerns that the US may stop its quantitative easing policy.
Growth in countries like China will slow, which means less demand for commodities, which means slower growth for African exports, which means slower domestic growth. That also means potential balance of payments problems.
The 8th G20 meeting will kick off later this week with the agenda set to focus on developing policies aimed at improving sustainable, inclusive and balanced growth, as well as lifting employment around the world.
But it remains to be seen just how unified leaders will be in their discussions, as they're already divided on the prospect of military intervention in Syria, an issue that's likely to drag out for some time and, according to analysts, could cause another global economic crisis. Sumitra Naidu, CCTV, Johannesburg.
Let's get your global feedback right now. Melanie Ralph is live in London. CCTV's Guan Ching is live in St. Petersburg in Russia. They join us now live on the line. Guan, let's start with you. Syria, obviously, will be right at the top of the agenda for this G20 meeting. But what else is on the agenda from a policy standpoint that could directly benefit Africa? Okay, Guan, just to repeat that, Syria, of course, high in the agenda for the G20 meeting that will be starting in a couple of days. But as far as the policy agenda is concerned, what elements specifically could benefit Africa?
Well, we know South Africa is the only African country as a G20 member, and a big concern of the country is the U.S. tapering out, which has triggered a sell-off in emerging markets. For example, the rand has lost 18% against the U.S. dollar. Although the impact on China is limited, China's Vice Finance Minister Zhu Guangyao said ahead of the meeting that the U.S. should consider when and how fast to unwind its economic stimulus without harming emerging markets. And this is going to be a big topic as the upcoming summit, and countries are expected to have better coordination of their monetary policies. And BRICS nations are also likely to agree on the $100 billion US currency reserve fund to ease the short-term liquidity pressure and safeguard financial stability of emerging economies. And details are likely to be announced when the BRICS nations leaders meet at the sideline of the summit on Thursday. Back to you.
Indeed, Guan, of course, deputy finance ministers of the G20 countries have been meeting from the 2nd to the 4th of September. Out of their deliberations, what can we expect to see from the leaders with respect to tax avoidance and tax evasion policy moving forward?
Well, the Russian action plan, which is expected to be released after the meeting, is likely to focus on economic growth and job creation around the world. According to the statement released after the finance ministers meeting, they say though there are signs of stronger economies in the US and Japan, the Eurozone is still in recession and the economic growth in emerging economies are slowing down. So there is a need to shore up growth and create jobs ahead of austerity measures. And according to another statement released by the IMF, It cautioned about the recent market volatility and spillover effects of monetary policies and called for balanced and credible fiscal strategies. Back to you.
Indeed. Melanie, over in London, coming to you there. Given the tidal wave of money that we're seeing fleeing away from developing economies all the way back to the developed ones, what sort of buffers really can developing economies put in place to hedge against the economic pain they will feel from this outflow of capital?
Well, the collective emerging economies, including China, India, Brazil, Russia and South Africa, are meeting, as you were saying, on the sidelines of the G20 summit to discuss progress on plans to create a BRICS development bank, and also intends to establish a pool of foreign reserves of up to $100 billion, also known as the currency reserve arrangement. Now, BRICS leaders agreed and approved a lot of the measures at the summit in South Africa earlier in the year. But the problem now, in order to establish this buffer and a safety net, but the problem now is how long it's going to take to actually implement this and how it will actually run. The ins and outs of the actual plan is not actually finalised yet.
Indeed. A final question to you, Kwang, in St. Petersburg. In June, the G8 summit leaders essentially asked the OECD to come up with a plan to have companies, multinationals in particular, reporting their taxes and their profits on a country-by-country basis. Has any progress been made on that idea?
Sure, the OECD has come up with a 15-point action plan for a united fight against tax evasion practices of multinational companies, and the G20 summit is likely to agree on the measures, and is likely to close the loopholes and allow countries to tax profits held by offshore subsidiaries. And according to Oxfam, a global charity organization, trade mispricing, which is as tax evasion practice alone, is causing African countries to lose $38 billion a year. So changing tax rules and cracking down on such behaviors will have significance to benefit the African economies.
Indeed. We'll have to leave it there for the time being, though. Thank you very much for your time. Melanie Ralph in London and Guangxing in St. Petersburg in Russia. Looking forward to the coverage, of course, of the G20 summit, which, of course, will be kicking off on the 6th of September. We'll be live all the way around. Time for a short break here on Africa Live. Here's what's coming up next. Egyptian authorities are warning the country's economy may be the target of economic sabotage. We'll have more live from Cairo when we come back. (17:45 GMT), you're watching BizAfrica. Now, the economy could be the next battleground in this political struggle we're seeing over the last couple of years, really, between the Muslim Brotherhood and the current political leaders in Egypt. Sources in the government claim that the Muslim Brotherhood is applying what has been described as economic sabotage. With the details, here's CCTV's Yasser Hakim.
Economic hardship has been the driving force behind the uprisings that have displaced two presidents in the last 2 years. It's the weak spot that Morsi supporters are hoping to exploit following recent setbacks and the crackdown on its leaders.
Plans were discovered with arrested Brotherhood leaders to target the economy and turn the people on the government. They will sabotage vital sources of income such as tourism, investments and the Suez Canal. Add to this the militant attacks in Sinai as well.
This week, an attack on the Suez Canal was foiled by the military, and a bomb was defused at the main train station in Alexandria. When 4 Brotherhood members were caught with 23 bombs on the way to an industrial city, many were quick to spot a trend that may point to a new strategy from the Brotherhood to sabotage the economy.
The Muslim Brotherhood knows that Egyptians have no more patience. It hopes that by keeping tourists and investors away, there will be no improvements in living conditions and people will topple the current leadership just like they did with Morsi.
The sentiment is shared by a portion of the population.
Morsi blamed Mubarak's remnants for his failure. We don't want a similar talk. We've lost our jobs in the last 3 years and we want improvements now.
As it's about to be disbanded, there was no official reply from the Muslim Brotherhood on government claims that it is trying to undermine its development programs. But with Arab aid at its disposal, the government seems confident of success.
We are adamant to continue on our path with the aim of improving the living conditions of the people. Social justice for all is our main goal.
Experts say for social justice to be achieved, security and stability should first be retained. Economic sabotage might be the new plan of action by the Muslim Brotherhood, but what Egyptians expect after years of unrelenting political and economic turmoil is not finger-pointing by the new leadership, but action to restore the shattered Egyptian economy. Yasser Hakim for CCTV, Cairo.
And Yasser Kim joins us now live from the Egyptian capital. He's live on the line. Yasser, on Tuesday, the interim president spoke of a gradual improvement in security. What data supports that argument?
There's a lot of improvement regarding the number of incidents happening per day, especially in the main cities like Cairo and Alexandria and other cities in Suez. There are less demonstrations, less cut-off of roads and streets, less strikes, also less attacks on the military and the civilians. So overall, even the curfew has been shortened from 7 p.m. till now it's 11 p.m. and it's been shortened by 4 hours. And as he said, by next Sunday, he hopes that it will be shortened even more. So the numbers are better, maybe a little bit more in Sinai, in northern Sinai, in Rafah area close to the borders with Gaza. It's still a bit violent over there because of the crackdown on the militants by the army and the military in Egypt.
Indeed, following, of course, the attack by these 3 individuals with machine guns on a vessel that was transiting the Suez Canal earlier in the week. What changes to security, if any, have been made along the canal?
Yes, the more military personnel have been deployed around the Suez Canal. There's more armored vehicles and tanks in the area. Now also the military is cooperating with the tribes around the Suez Canal in the areas on the outskirts of the city. It's a tribal area. A lot of Bedouins live there who know the area very well and been living for years and know the desert where the militants try to attack from. And now there's a big cooperation between the military and the Bedouins living in the area where they can help together to avert any more attacks on the Suez Canal. As you know, the Suez amounts to about 8% of the world trade goes through this canal. So it's important not only for Egypt but for the international trade that this area remains safe. And this is what Egypt is trying to put forth to the international community, that nothing, it's been an individual attack, and it's making sure it does not happen again.
Indeed, finally, Yasser, Turkey's ambassador to Egypt is back in the country, but we understand that Egypt won't be sending its ambassador back, quote, until Turkey stops interfering in Egyptian affairs, end of quote. What's the state of diplomatic ties between these 2 countries at the moment?
If you talk officially, nothing has been cut off. I mean, there's visas are still open between both. The 2 embassies are operating normally. Maybe there was the operation, joint military operations, training operations have been cancelled, but some trade between companies, the foreign exchange, the foreign trade, and also the stock exchange agreement has been cancelled. But on the diplomatic side, things are still normal so far. What I've been told is that the Turkish ambassador, when he returns in the next couple of hours, a few hours, he will be trying to forge relations back to try to retain the normal close relations between both countries, trying to bridge the gap that happened in the last few months between both sides. The Egyptian side is demanding that the Prime Minister Erdogan would apologized for comments he said about the Al-Azhar chief, a respectable institution in the Islamic world, which is located in Cairo, and Erdogan had criticized it strongly, but the Egyptian government says that it is willing to sit and speak about retaining old relations, the close relations between Turkey and Egypt, and it's hoping that the return of the Turkish ambassador would help in smoothing the relations back again.
Indeed, we'll have to leave it there for the time being. Thank you very much for that. That's CCTV's Yasser came alive in the Egyptian capital of Cairo. Now, on to East Africa, where the Kenyan retailer Uchumi Supermarkets is at the advanced stage of investing in new malls in neighbouring Tanzania, in a concept that apparently has hardly been explored in that country. Now, the company came out of receivership about 3 years ago, and according to the group CEO, Jonathan Shiano, it has completed its recovery and is now in its expansion phase. Uchumi plans to open at least 8 new branches in Kenya, Tanzania and Uganda before the end of 2013, before then moving on to Southern Sudan. The company is also waiting for the Capital Markets Authority's approvals before cross-listing on the bourses in Uganda, Tanzania and Rwanda. Uchumi made $5.5 million in untaxed profit for the full year to June 2013.
Uganda, we expect only 1. In Tanzania, we have 2 that are advanced, and we have a memorandum of understanding yet to be signed with one of the main developers in Tanzania, and that might give us 3 to 5 branches in Tanzania before June next year. 2 of them very advanced. We already have 1, so I would say we should have 3. Tanzania has a long way to go in terms of the development of the hypers, but it is very, very ready to do it.
All right then, quick run through the markets before we show you a bit of martial arts action, as it were. Starting in Nigeria, the all-share index is, of course, ending the day marginally high in the green, up 0.01 percentage points. The all-share index in South Africa ending the day higher, down 0.112, and the 20-share index in the Kenyan capital, Nairobi, snapping that bear run we've seen over the last few trading sessions, up by 1/4. The Egyptian market ending the day lower, down 0.12%. That's business for you at 17:53 GMT. On to the sport now with Beatrice.
Rama, many thanks indeed. The sport coming up next, the headlines.